Welcome to the TPO Bootcamp. I'm Brad, the owner of the Trade Vets. Our mission is to guide traders toward financial independence by valuing time above all else. We prioritize understanding opportunities by tracking value, not just price. Remember, proficiency in risk management grows through time and hands-on experience. Quick success isn't our goal. We believe in building a sturdy foundation before pursuing profits. Let's emphasize the significance of time in our journey toward financial independence. In the 1980s, J. Peter Steidlmayer changed the game. At the Chicago Board of Trade, CBOT, he introduced the groundbreaking market profile concept, a game changer in market analysis. Collaborating closely with traders and analysts, Steidlmayer took market profile beyond the norm. Together, they refined the concept, expanding its horizons beyond traditional analysis. The 80s and 90s saw market profile rise to prominence. It extended its reach far beyond CBOT, gaining ground in futures and commodities trading. As technology advanced, market profile became more accessible. It seamlessly integrated into computerized trading platforms, making waves in the trading world. Fast forward to the 2000s and beyond, market profile went global. It became a cornerstone in global markets, from stocks to forex spanning various assets and transcending borders. And it didn't stop there. Market profile keeps evolving. Traders adapt and refine it, integrating new tools and strategies to stay ahead in the ever-changing landscape. Figures like Steidlmayer and James Dalton played crucial roles in shaping market profile. Their contributions enriched its evolution, leaving a lasting impact. In the trading world, everyone's on the hunt for the elusive secrets of success. Yet too often, we search in the wrong places, hoping for shortcuts that simply don't exist. Welcome to a journey beyond shortcuts, into the realm of immersive learning. Here, we don't just aim for good, we aim for great. I introduce you to the market profile, a pivotal tool that transforms analysis into insight. In the world of market analysis, the key to success is an unbiased perspective. Understand the ebb and flow of market trends, and let knowledge be your guide. Research diligently, analyze thoroughly, and become the analyst you can trust. Trading is not just about numbers. It's an art of balancing emotion and strategy. Keep optimism in your heart and fear, greed, and FOMO in check with the pole of discipline. It's this balance that will shape you into a true risk manager. When we think of auctions, diverse images come to mind. Now imagine the same competitive spirit in the financial markets, where electronic auctions decide the fate of stocks. Understanding these dynamics opens a world where market value fluctuates with every bid, every strategy, every second. To truly master market movements, one must delve into the core of auction theory, where the market profile shines as a graphical guide. It's the interplay of valuation, where buyers and sellers converge, shaping prices in real time. Consider the act of purchasing a computer screen. A $1,000 price may seem steep until you find it online for $800. This scene exemplifies market value, a concept fluid and ever-changing, just like the auction market theory predicts. Imagine the market as a story, and each market profile chart as a page within. As we delve into this narrative, we learn to read beyond the numbers, identifying peaks and valleys that represent the market's collective decisions. Here, in these colorful data landscapes, every spike, every dip tells us of supply and demand, of battles between buyers and sellers. And as we interpret these charts, we become fluent in the language of the markets. Beneath every market movement lies a foundation, a framework that holds the keys to understanding. Like building blocks, the principles of time, price, and volume come together to give structure to our analysis. This is our blueprint, where time reflects opportunity, price indicates value, and volume shows conviction. Grasp this, and you hold the conceptual framework that reveals the market's true narrative. The markets are a symphony of participants, each playing their part in harmony, from retail traders to mighty institutions, from market makers to regulators. Each has a role, each a purpose. Our whiteboard becomes a map, charting the interactions, the flows of capital, and the influence they bear upon the tapestry of trade. Understanding this organizational structure allows us to see not just the threads, but the pattern they weave. Welcome to the Grand Bazaar of Trading, where the marketplace's sole mission is to facilitate the dance of trade. Imagine price as a conductor, with every rise inviting buyers to join the fray, and every dip summoning sellers to the floor. In this arena, we witness the dual auction process in motion. The market climbs, reaching out for buyers until there are none left to climb higher. It then cascades, seeking sellers until they too dissipate. One auction's end heralds the other's beginning, an endless cycle of ebb and flow. But what if our call for sellers echoes unanswered, and buyers keep flooding in? The market has no choice but to climb higher, seeking the point where equilibrium is restored, where the auction can transition once more. This is the essence of the market's organizational structure. It's a rhythmic call and response, a seesaw of actions and reactions. Understanding this flow is pivotal, for it is here that the up auction ends and the down auction takes its cue to commence. Picture the market as an artist, painting its canvas with broad strokes, each move setting the boundaries of its masterpiece. At the bottom, an unfair low, a price too tempting for buyers to resist. At the top, an unfair high, a peak where sellers rush in, seeing too much to gain from selling. These extremes, the unfair low and the unfair high, frame our market's narrative. They are the excesses, the outliers, the market's bold proclamations of its range. And within these bounds, the market embarks on a quest to find value, trading between these excesses in search of a fair price. Freeze any moment in the market and you'll find these three critical reference points: the unfair low, the unfair high, and the value, each a vital chapter in the story of trade negotiation. To witness this in action, let's step back to a time when the S&P 500 painted its picture. Observe point 1, our unfair low set, and point 2, the unfair high. These were the market's chosen limits. The dance of negotiation then began, with the market gracefully stepping from the unfair low up to the unfair high. In the face of perceived value, the market recoiled, unable to break through the established high. As the market reached to surpass the unfair high, confidence wavered. It was here that the market's momentum faltered, and the traders, ever so cautious, withdrew, reversing the tide once again. Envision the market as a grand scale, striving for harmony. It is in a constant dance, shifting from imbalance to balance and back again, a cycle as rhythmic as the pulse of commerce itself. In the short sprint of a session or the long marathon of trends, the market's heartbeat is this oscillation. When balanced, buyers and sellers reach an accord, each side as weighty as the other, circling around a fair price where goods and services can be exchanged with equity. Here, in this equilibrium, the market rotates, content in the fairness of price, a fulcrum around which trade can flourish. But when the scale tips, when either buyers or sellers surge ahead, the market is thrown into imbalance. It stretches upward or downward, a seeker in search of the elusive fair price to restore balance. Imagine the market as a stage, and time as the script that actors must follow. Time frames are not mere ticks of the clock. They are forcing points, moments that demand action, decisions to be made. For instance, picture yourself trading, the market's curtain call approaching in 45 minutes. If you are not one to take the stage overnight, the impending close coerces you into a decision. This moment, this forcing point, casts you in the role of a short-term trader. In contrast, suppose you have an option that doesn't take its final bow for 2 months. The distant forcing point allows you to bask in the longer-term trader's spotlight, with ample scenes to play out your strategy. Steidlmayer, in his insight, saw the market's play divided into 2 acts: the short-term hustle of the day trader and the longer-term narrative of other time-frame activities. He envisioned this as a tandem time-frame concept, where the day's urgency stands on one side, while the enduring plots of the longer term unfold on the other. Step into the realm of market analysis, where charts speak louder than words, each telling a unique story of market movements. Among these, market profile charts stand out as a beacon, offering a perspective that many traders and investors consider unparalleled. Thanks to personal computers, we can now dive into a sea of data, visualized in myriad forms. Yet in this vast ocean, chart types generally anchor in one of 2 harbors: time-based or non-time-based charts. Time-based charts, the navigators of market seas, plot price movements against the relentless march of time. These charts, like the commonly used bar and candlestick charts, are tailored by traders to reflect their trading rhythm, be it in minutes, days, weeks, or months. Watch as each bar and candlestick forms, capturing the ebb and flow of prices within set timeframes, encapsulating the market's heartbeat within those temporal boundaries. But then there's the market profile chart, a different lens through which to view the market story. It's not just about time, but about the market's depth, its volume, its participants. It offers a three-dimensional view, weaving the tapestry of price, time, and volume together. As we embark on this journey of discovery, remember that each chart type holds its key, unlocking different aspects of the market's narrative. But it is the market profile chart that brings a symphony of all these elements, offering insights that might otherwise remain hidden in the folds of market data. Let's explore the essential components of the market profile, introducing key acronyms and their representations. VAH and VAL, standing for value area high and low, represent about 68% of the day's trading activity. POC, or point of control, represents the fairest price and the most trading activity during a session. The open marked in yellow and the close or current price marked by a red triangle signify the day's start and end. The composite profile displays the day's regular activity, while the split profile shows columns separately. As trade activity unfolds, columns form the full market profile structure for the day. This structure reveals crucial information about market balance, fair prices, and value areas. The full market profile chart encapsulates the day's market activities and assists in determining fair prices and value areas. To truly grasp the essence of this innovative chart, we must start at its foundation, the time price opportunities, or TPOs. These are the elemental bricks that construct the grand edifice of the market profile chart. Each TPO represents a moment in time when the market touches a particular price. As these moments accumulate, they form a landscape of market activity, offering insights into where the market has been most active. As we navigate through the intricacies of the market profile chart, we will uncover its core elements. From the value area, a region of significant trade, to the high-volume nodes, each component plays a crucial role in deciphering the market's narrative. The market profile chart, thus, is not just a tool for tracking price and time, it's a window into the market's soul, revealing the story of actual market activity in a depth and detail unparalleled by conventional charting methods. Imagine a market touching a specific price at a precise moment. This intersection, this fleeting instance, births a TPO. It's a snapshot, a memory of a trade opportunity at that price and time. Whether it's a lone trade or a flurry of activity, at this price within a set period, the market profile chart marks it with just one TPO. This simplicity is its elegance, capturing the essence of market activity without clutter. Picture the market profile chart at the dawn of the trading day, a canvas awaiting its first strokes. The day's narrative always begins on the left side, each price touch birthing a new time price opportunity, a TPO. As the market stirs, the first trade at any price marks its presence, with a TPO in the active column. It's the opening act, the chart's first whisper of the day's story. Watch as the market revisits a price later in the day, during another time period. This repeated touch doesn't go unnoticed. It creates a new TPO, in a new column, right next to its earlier counterpart. Each TPO carries a unique letter, a marker of the time period it belongs to. The distinction is clear, a visual chronicle of when each price was sought after during the day. As the market ebbs and flows, it moves up and down the price ladder. With each climb and descent, it leaves behind TPOs, painting the first column of the day. This evolving portrait is the market's auction process in action. Remember, a price touched multiple times within the same period doesn't clutter the chart with excess TPOs. It's elegantly marked just once, maintaining clarity. It's only when the same price is revisited in different periods that new TPOs emerge, each period leaving its unique fingerprint on the day's narrative. As the market closes, the completed market profile chart stands as a testament to the day's journey. It's a map for traders to navigate the intricacies of the market, offering a clear view of where the day ventured, and perhaps hints of where tomorrow might lead. In the landscape of market profile charts, a fascinating phenomenon often emerges: the buying tail. Picture this as the market's journey into new, lower price territories, akin to an explorer venturing into uncharted lands. As the market descends into these lower depths, it catches the eye of responsive buyers. These are the long-term traders, the market's equivalent of savvy shoppers, always on the lookout for a bargain. When prices hit a point that's too good to resist, they leap into action. Watch as these attractive low prices ignite a flurry of buying. This activity is marked on the chart as a buying tail, a visual testament to the presence of aggressive buyers at these levels. It's a signal, loud and clear, that the market has stumbled upon what's perceived as an unfair low. The tail of the buying tail is told in its length. A longer tail speaks of a significant bargain, a deal too good for the buyers to pass up. Even a single print can hint at this activity, but it's the longer tails that truly underscore the buyer's conviction. Much like a market's memory, it often returns to these bargain levels, testing the waters to see if the buyer's enthusiasm remains as fervent as before. Within the evolving story of a market profile chart, there's a moment known as the selling tail. Envision the market ascending into higher price realms, much like a climber reaching new heights. As prices soar to levels deemed too lofty by market participants, sellers emerge, ready to capitalize. These are traders who perceive these highs as unsustainable, an unfair peak. They step in, ready to offload, to sell at these advantageous points. Watch as this collective selling response shapes the selling tail. It's a visual marker on the chart, an evidence of the seller's eagerness to act at what they believe are unjustifiably high prices. The narrative of the selling tail is revealed in its length. A longer tail is a tale of stronger conviction, a louder declaration of the seller's belief in the overvaluation. It's a significant sign, a marker of resistance. Like a market with a memory, it often revisits these elevated levels, probing to see if the seller's sentiment persists. Will they still view these heights as unjustified? Will they continue to resist? The market's ever-changing nature ensures that these high points, these unfair highs, will be revisited. It's a perpetual cycle of testing and retesting as the market seeks to find equilibrium in its constant flux. In the realm of market profile charts, there exists a concept pivotal to understanding market dynamics: the value area. This feature is so central to the profile's narrative, it warrants its own chapter, its own spotlight. Imagine a territory within the chart, a land that holds 70% of the day's tails, 70% of the time price opportunities. This is the value area, the heartland of the day's trading journey. The value area is not just a random collection of prices. It's a curated range, a consensus of worth among market participants. It's where the bulk of the day's drama unfolds, where the majority of trades find harmony. Bound by the value area low at its base and the value area high at its crest, this range is the market's comfort zone. Within these boundaries lies the core of the day's trading saga. Here, within these confines, traders and market forces converge, agreeing more often than not on what is fair, what is valuable. It's a zone of agreement, a meeting ground for the day's myriad voices. As we delve deeper into the market profile chart, keep in mind that the value area is more than just a segment of the chart. It's a narrative within a narrative, a story within a story, revealing the market's collective judgment on value for that day. In the intricate world of market profile charts, there exists a distinctive feature known as the single print. This unique element stands out in the chart's landscape, marking moments of singular activity. When a single print appears nestled within the heart of the profile, it takes on a different meaning. Known as a minus development, it highlights a brief but intense episode of trading at that level. Single prints are not mere anomalies. They are the storytellers of the market profile chart. They reveal where long-term traders made their stand, showing us where aggressive buying or selling took place. Time price opportunity, or TPO, the most fundamental unit of market activity. each marking a unique moment of agreement between buyers and sellers. It's through these TPOs that we begin to decode the market's language, offering us insights into where value lies and where the next chapter of the market's story may lead us. Range extension plays a pivotal role in unveiling the market's narrative. It's the moment the market strides beyond the confines of the current balance, embarking on a journey to new highs or lows. These extensions serve as our crystal ball, offering glimpses into the market's sentiment. The buying tail emerges as a powerful signal, marking where the market perceives prices to have dipped to unfair lows. The length of this tail tells a story of conviction. Conversely, the selling tail appears when the market reaches what's deemed an unfairly high price point. The length of the selling tail is a barometer of urgency. Thus, the selling tail on our chart is more than a mere marker. It's a clear indicator of the market's sentiment, highlighting where sellers feel the prices are too good to pass up. Just as a river carves its path through the landscape, the value area shapes the flow of the market, guiding traders towards the levels at which the market feels most comfortable. This zone tells a story of equilibrium, where buyers and sellers find common ground, making it a critical reference for understanding market dynamics. Recognizing and interpreting this area allows traders to gauge where the market places its highest regard, providing invaluable insights into potential support and resistance levels. And that, my friends, brings us to the end of our journey through the basics of time price opportunities, or TPOs, in market profile charts. I'm Brad, and it's been an absolute pleasure guiding you through these foundational concepts today. Your curiosity and eagerness to learn make these sessions truly rewarding. But don't think the adventure stops here. We've only just scratched the surface of what market profile charts have to offer. I'm thrilled to invite you to join me for the upcoming classes, where we'll dive even deeper into the fascinating world of market analysis and trading strategies. There's so much more to explore together. Thank you so much for joining me today. Your engagement and passion for learning make all the difference. I look forward to seeing you in our next class. Until then, keep exploring, keep questioning, and most importantly, manage risk and stick to your trade plan.